Welcome to today's video, which is called High Yields and USD Up. In short, this is not a good day for anti-dollar plays. So, let me recap this day and what I see unfolding tomorrow and answer some incoming questions that have arrived in the meantime. So, I hope that you are already subscribed to daily analyses and following closely and talking via Twitter and Telegram for notifications. So, big picture, what the data points today have brought for stocks and so on. Manufacturing PMIs, sure, 0.5 percentage point below expectations. It's not a huge undershoot, but the soft landing narrative would have required a much better reading, above 47. It seemed very probable that we would get this figure, but examining what other markets have been doing yesterday, there were some hints hinting at this being a breach, maybe a bit too far, and especially the market reaction following that, be it in stocks or other assets, have proved that. The slight increase in yields, intraday I mean, when further upside in long-dated treasuries had been rejected and TLT nicely followed lower from its intraday highs, was one of the clues, and yields kept on rising even faster during today. And one of the clues that I had presented to premium subscribers at the onset of today as to why I'm looking for buyers, stock market buyers, to be on the defensive was the Nasdaq market breadth. The percentage of stocks trading above their 50-day moving averages went sharply down, and it's never a good sign when only the generals are leading the charge. Similarly, the surprisingly good gold strength Monday had been rejected, and it's been one-way road today. As you have read today's analysis, you know that I have called for oil to be among the most resilient ones from the real asset crowd, and it was so. This is closely tied to the intraday gold and oil service, which I have introduced for all the trading signals and intraday signals combination subscribers, so that they have more assets to trade intraday. So today we were to face a genuine risk of day. So why didn't stocks really plunge? They just kept testing and wandering around 4,592. This support remained unbroken, and if you had seen on Twitter the two-part series where I highlighted what were the premium intraday stock signals within the closed Telegram group. It's not tweets, but it's telegrams. So what were they today? You had seen that I was looking for a similar reaction to yesterday as the close of today's session approaches, and we are seeing the floor quite nicely built, and we might get a similar stunning upside surprise late in the day or after market in stocks. I'm pretty sure as well that you have caught all the hidden second degree AI plays that I had been talking today, and it was tickers CAT and ticker UPST, one say for industrials and the other typical fintech. And for now it's pretty safe to say that big picture the pressure on Nasdaq would keep building up as yields march higher, and we are pretty close to break the series of last two local highs that are spaced away by many months in the 10-year. And what comes next for 15, for 20? There will be a serious setback that would cause markets to reevaluate risk-taking. The other telltale signs as to why I'm not expecting a hugely positive day in the stock market were financials, which didn't really catch fire yesterday, and overall the rotations into non-tech were really weak, and the disappointing showing in healthcare, which cannot be really ascribed to its more defensive, weaker parts such as United Health and so on. So these were the sectoral clues that pointed towards a day challenging the soft landing narrative. This would be a good summary. Day challenging soft landing narrative. So, as I hope that you have read today's freely available analysis, you would have seen me there covering this very chart, and already today we are seeing gold reach that downside target that I specified, whichever gold contract you trade or whether you are in USD. As for crude oil, the very bullish grind higher with barely an intraday consolidation keeps holding through, and similarly what I had called today for easy defense of the $80 handle had happened. So I hope that you benefited from the timely analysis and all the extra free alpha given over Twitter. So make sure that you are subscribed and making the most of what I do. Side term supply, beware of the sharply multiplying impersonators, and obligatory disclaimer to top it off, and talk soon.